All right. Very, very good morning to everybody. Happy Monday. Welcome back to another week in the markets. And as always, let's go ahead and get started with my name being Jared, this being Engineering the Markets. Today is October 18th, 2021. And as always, we're going to start off with our SPX, which, as we recall, is our S&P index. And we often look at this for expected move. Now, last week, we had a lot of volatility throughout the market, both to the downside near the beginning of the week, and then, of course, our Thursday and Friday session putting up some interesting technical and strong momentum moves back to the upside. But from the perspective of our expected move, it's often worth mentioning that we have simply done what the expected move predicted. Essentially, because this marker on the option market exists, we know early in the week what the likelihood of movement and how wide that movement is priced in before we even enter the market each and every week. And if you look at where we closed on last week's session, we already had this number marked, about 44.71. If you dig down a little deeper, you'll even see that as the market was getting to the close, this area acted as an area of risk for the market. It's the intention of the expected move. Essentially, if we breach this area, this is where firms, market makers, people who deal with market participants have to begin hedging some of their directional bias risk. But because the market was able to rally into this area and the market participants who control the option market were able to halt any further upside, we had sort of this dampened price action near the close. And that, of course, can be seen on the SPY as well, not so much in the accuracy of that price level. Remember that the SPX options are inherently different than the SPY, but because of the notional value of the SPX options and the fact that they do have weighting on market directionality and expected move dynamics, the SPY, of course, had some of that dampened action as well, leading into a close of approximately 446. Once again, noting that it's not necessarily a one-to-one with the SPX, but it can affect the market at large. So why is this important? Why do we care that the market was able to tag the upper edge of the expected move last week? Well, for one, it shows that to some degree, the market is respecting these areas of risk. So it's worth knowing that if the market is efficient and the market wants to stay bound within normal standard deviations of movement, then having these price levels marked each and every week can give us an idea of targets. Essentially, if you are looking to be bullish and yet the market is efficient, it can be wise to not necessarily target much more than the upper edge of the expected move, because oftentimes the market will halt, or even if we do breach beyond, it'll return back to this standard deviation range and basically halt itself from going much further. Same idea if you're a bear. The idea is that we are opening somewhere within this new expected move range. And for a downside target, it may not be worth considering much more downside beyond that 44.10 lower edge of the expected move for the week. So simply just having these as areas of interest and knowing that if we were to gap below, which we did see some of that volatility as the market was starting to break apart and start to form its downtrend, but also noting that volatility often comes hand in hand. The market will expand this expected move accordingly, and that is something you can also take advantage of, whether you're looking to hedge a portfolio, and obviously you want to start that hedging process when volatility is compressed, or if you're looking at simply option selling strategies, looking to maybe take advantage of that volatility expansion with the understanding that it may take a few weeks for the overall S&P volatility to reduce. So as we look into these expected moves, it's worth noting that the market closed in an efficient manner. We stayed within the regular bounds of the SPX expected move. And as we move into this week, that volatility and that range has contracted. We were coming off approximately about a 70 to 80 point expected move. And this week we are down to approximately 62 points up or down. So always worth just noting these areas, understanding that usually markets are efficient and markets like to remain bound within these ranges. Even in periods of higher volatility, they will often return to these ranges. It's only when we see breaches that things truly start to accelerate and the width along with the overall range of the market starts to really expand. So as we look into our SPY, it's also worth mentioning that we have some new technical developments. Now, regardless of your bias so far in the market and with what we've seen, it is worth mentioning that the market is no longer in a daily downtrend. We have simply broken the rules of what a downtrend is defined to be. And while this uptrend is relatively new and fresh and ultimately can reverse very quickly, it is also true that the downtrend is no longer present. So just simply knowing some things are empirically true based upon their defined definitions. The SPY, of course, seeing some of that breach of its downtrend on Thursday's session, the idea that the market was already starting to give us some clues that maybe Thursday and Friday were going to be a bit stronger than average. One, some of the selling pressure and some of the retesting of range lows had started to subside. We saw that the market continued to sell against our downtrend resistance, but what we were not seeing were accelerations to that lower end, basically strong bearish thrusts back through this range, lots of defense in between this lower bound range. And if you look at a shorter time frame, you can see some of that defense in the form of smaller ranges. Basically, as the market was trying to recapture this range high and sell it down to test out the range lows, the bulls were able to defend somewhere mid-range. This is sort of that nuance that we want to understand as traders, not necessarily because we want to be bullish or bearish at all times, but there are going to be moments in time where one side has more probabilistic edge. Basically, you want to be nimble throughout this market and look for these nuances, because as soon as you get signals that one thing is starting to happen, it can be worth either closing positions when you are wrong or opening up new positions when you notice the shift. And that is, of course, key to being a more intraday or swing type trader, because ultimately we want to be on the side of the market at all times. We want to understand who's in control and how strong is that control at that moment. So some of the nuance of last week is that, of course, we had our downtrend resistance, and this, of course, was adjusted as the market was starting to break down. We were using these swing highs, but as we formed this higher swing high, we simply moved our resistance a bit higher. And that's the idea behind this technical breakout, is that regardless of how you draw your downtrend, whether you keep these anchor points or you adjusted as I did, then ultimately it doesn't really matter. The market did break out of both, and therefore we have an empirical break of that trend. Additionally, worth noting that the upside on Thursday and Friday was pretty much one-sided. Basically, we had a correlated move starting on Thursday, and I would argue maybe somewhat settling itself on Friday with some of the less volatile price action. But looking just simply at a 4-hour or something like a lower time frame, we know that the bulls had pretty much complete control of the market on those past two sessions with very little pullbacks, and something as simple as our moving averages just kind of showing that strong uptrend with all moving averages aligned, and the fact that our pullbacks are relatively shallow. Additionally, as of course we've broken our daily downtrend, it's also worth noting that if we shift back into the perspective of the daily, we know that we have cleared two key moving averages. We've been able to close above both our 20, which of course was acting as a bit of resistance. We had some rejection on last week's session, and even rejection of the 50 on the prior week, leading to that secondary leg down. And now, as we see, the market was able to close above both of these key moving averages. Very notable change in sentiment. And ultimately, we need to see now them either backtest and confirm that this close is going to hold. And we're going to start to see sort of the regular uptrend that we've been seeing, or from this point forward, can we get more choppy price action? Basically that back and forth price action that we get when we hit relative value and larger range definition. Now, as the market has been in this position for just a period of a few weeks, it's worth also looking at additional data to see what else is controlling this upside move. As always with our NASDAQ, and due to the fact that some of the larger risk was controlled within the Qs, worth noting that the NASDAQ has very slightly breached this downtrend. Arguable that we are still sort of at risk for bears to take control once again. You can see that while we do have a very slight breach, the volume into this area started to reduce. Basically, we came from a much deeper low, and the momentum into this move started to dissipate as bulls started to run out of steam. So moving forward, and especially now that we are in earnings season, we can have some chop. Essentially, the Qs can remain a bit non-directional moving forward. And this is more from our daily perspective, where things take time to shift. Basically, each and every day is another data point, and that close, that context, some of the more shorter time frame analysis just gives us those additional bits of clues. But at the end of the day, one candle is just one data point. Now, as we know, the Qs have a very clean bullish channel that so far has remained. And with last week's close, this is essentially a confirmation of this support so far. Essentially, if you were aggressive as a bull inside of the NASDAQ, you were taking advantage of the fact that we were hitting this downside channel for the first time in approximately 4 to 5 months. And as a bear, you are also noting that so far, the NASDAQ has not been able to breach this downside channel. So your best advantage as a bear is to be as high or as close to this upside, basically transiting or traversing down through the channel to hit the lows, and then noticing the reaction from that point to see whether we continue to move higher or simply, sort of say flat in this range. Now, the reason I bring this up is for the NASDAQ, we had a session where we did some analysis of this channel. And what we noticed was as the market came to test this area, oftentimes we didn't necessarily just V bottom. We didn't hit this low and then immediately start to push higher, basically seeing no form of resistance. Instead, the market often liked to test this low side channel, sort of form some consolidation near the support, and then seeing a stronger breach. In this example here, something like the 4-hour 200, which coincides with something like our daily 50, that's sort of where we can start to see that momentum return from the bulls. And this, of course, is a more historical example, which means it doesn't have to take place at this time. but worth mentioning that the NASDAQ can easily transition from low to high, or sorry, high to low in this case. We can see that transition happen very quickly, and that catches a lot of people by surprise, but we've already seen it before back in time. And then when we get momentum back on the bull side is when we often start to breach above our 50-day moving average. Something like this is an example with very little in the way of pullbacks or pivots. And something like this back in time, which is our classic example that we use for our analysis. The idea that this market can form sort of a consolidative channel near this area and then break out once again, seeing more upside. Now, it's also worth mentioning that we do not necessarily have to transition from low to high in one fell swoop. Even something like a back test can occur, and that's often going to be predicated by what we have going inside of our interest rates or our bond market. As always, just keeping close eye on what the 10-year or longer time frame interest rates are doing, and just noting that something like the 10-year futures /ZN has been hitting relative lows. You'll also note that this morning we are breaching this low for the first time, this low being set back at the end of March. And if you were trading back at the end of March, you know that this was an important time frame for the NASDAQ. All we have to do is look back here and simply draw our timeline back to where the momentum came into this market, basically the breakout of that channel. So what's occurring now is, of course, a little different, and we are simply at that key inflection point once again. Essentially the same time frame, the same thought process behind momentum, rejection, whether this is going to hold for an extended period of time, and simply noting that the tech sector is not out of the woods quite yet. We are seeing some breach of this area, and if we continue to move lower, just starting to look at what the downside of this market can provide. Something like this range area here, this sort of consolidative period where the market can ultimately transition all the way to this low before finding some sort of major support. So those are our theses coming into this market this week. And as we looked at last week's performance, we're trying to basically ascertain, should we trust this rally? Has this rally given everything it's willing to give? And are we entering a phase of, I would say, non-directional trading? Or are we simply going to see higher highs and higher lows for a period of a few days, getting us close to, if not testing, the all-time highs? One thing that, of course, we've been watching is the bond market. So just keeping these major inflectionary price levels on watch and seeing what the market does here. If we continue to see interest rates rise with this bond market falling, in this case, the Treasury notes, the 10-year, then it can be worth considering that the tech sector might see more downside, or it simply might not see the same momentum that it saw back in the end of March. We can also be looking at some of our other risk factors, our dollar, which continues to, at the short term, pull back into its dominant sort of 20-day moving average. Definitely looking to see this start to break down if the equities market is to have more upside. We've seen that pullback. This was a 2 to 3 day pullback in the dollar, but we've already seen a lot of upside momentum that can easily turn over if this continues to push. Our volatility, our VIX, Thursday and Friday, breaking down, moving away from that key $20 price level, simply coming back into a relative area of support, something like a very basic trend line, just showing where volatility has spiked in the past. Also noting this morning that volatility is a bit elevated. So just kind of watching to see over the next couple of sessions, what is our reaction here? What is the market trying to tell us in terms of hedging activity? Is there fear? Those are the questions that you want to carry forward. Additionally, worth noting that if you do need a hedge, If you are looking to protect yourself in the event that we do have more downside in this market, this is the time to start considering those hedges. You do not want to put on hedges whenever the market is breaking down. You want to have them on and have them be long enough to where when we spike, your hedge will be protecting your upside. And let's see, those are our main risk factors, but we did bring up one additional one last week. And that's, of course, our high yield corporate bond ETF. Something like HYG is one that most people use, or you can look at something like J&K. Now, last week, we simply entered Thursday and we started with a morning thesis. We said today is a special kind of day. Every single risk factor that we looked at on that Thursday session was starting to abate. We had everything moving in the direction of the bull camp. And if you traded on Thursday, if you were not a bull in the overall marketplace in terms of the S&P stocks, then you were fighting larger money. You were basically saying that you did not trust that trend day, even though all of our internal structure was very strong. Something like an advanced decline line is a good, easy way to see that. And the advanced decline line of the S&P was hitting anywhere from 50 to 70 to 1. The capital flow was hitting about 50 to 70 to 1 of advancing versus declining stocks. Most of the advancing stocks were, most of the day, the advancing was hitting about 90 to 10, basically saying that for every stock in the S&P, 9 of them were moving higher versus one that was either moving lower or starting to improve. So it was a very challenging day to be a bear on Thursday, simply because you were fighting all of the forces that we look at. You were fighting lowered volatility. You were fighting interest rates starting to abate, allowing for the tech sector to breathe. You were fighting high yield starting to recover. Essentially, the market starting to indicate that the risk that they were seeing back in this time frame was starting to be resolved. Seeing some of that upside pressure back into this ETF, and basically that relief rally coming into play for 2 sessions. Now, the purpose of what we're discussing this morning, and the reason why we bring all these pictures back up and basically just review what has occurred, is because we have historical reference here. We have reason to believe that if this market wants to continue, and if you are not positioned for long or short, you're trying to understand what does the market often do to recover such a deep correction. You know, ultimately, this entire past couple of weeks has been a notable downside move. It's something that a lot of people probably were not prepared for. And if we just look contextually, the marketplace drew down about 6%, with the NASDAQ seeing more downside coming from low to high. We were seeing approximately an 8 to 9% decline. So this correction was notable. It's worth recording. It's worth understanding. But we've seen it before. It's not new, even in the context of the past year. As bullish as this market has been, we've had moments in time like this. And simply what we're trying to do is, what are some of the factors that occurred during this time frame, and when did they change? When they changed, what was most important? Was it interest rates? Were those starting to be relieved, allowing for the NASDAQ to start to break out and have strong momentum? The answer is yes. The 10-year, of course, showing that relative low, and of course, interest rates respecting that movement inside of that marketplace. Additionally, noting that shorter term fear, shorter term volatility, shorter term skew, something as simple as our equal weight ETFs, looking to see that they are, of course, breaking out as well with the NASDAQ, and our S&P is starting to test all-time highs. Equal weighted ETF here, but seeing that some of our breadth is returning, it's worth considering that this rally has some upside baked into it. Now, what we may see is a little bit of energy getting built, basically to give us the potential for upside. And as always, when we're looking at things like this, we want to start looking a little bit shorter term. We want to bring things down to a volume profile and say, okay, this market had a strong impulsive move away from value, away from our VPOC on the volume profile, and away from a key price level, 435 on the S&P. Looking back in time, we see that this move has some impulsivity built into it. We've transitioned from VPOC to VA high. So this part of the move has been achieved. If you're looking simply at volume profile, we've sort of hit a target. We don't necessarily have to move much higher in the form of such an impulsive upside direction. What can happen now is we need to sort of challenge this high and basically allow the market to tell us if this high still is going to be our dominant resistance moving forward. If it is, then that confirms a lot of our selling pressure. And if I extend this out, we see that the market really started to break down once we lost this low, along with retesting it as our high, our overall downtrend resistance once the market printed it. A lot of things converging in this area. But if we are to break this high, then understand that from the bear perspective, we've sort of lost a lot of that, I would say, notional fear and the dominant resistance in regards to when the selling started. So regardless of your directional bias, look and see what the market is telling you here. We have some things starting to abate. If they continue to abate and the market starts to break through these levels, be aware that we can be testing all-time highs in a very short amount of time, essentially seeing capital flow return on Thursday and Friday, high correlation in the market, a lot of stocks being bought as baskets as opposed to sectors. Marketplace also giving us some technical signals and noting that while this move may be finished in the short term, bulls are now looking for the next leg of this upside move. They're essentially looking for that higher low to be placed. They're starting to mark things like where the dominant demand is being found in this market, something like our new trend line that is starting to form. And just noting that if we see more bullish activity as we pull back, that's the sort of force needed to break resistance and basically to start putting pressure on bears who have not yet covered. Basically, the strong bears who sold are now being tested. And ultimately, their pain, their covering, the rally that can follow from all of that is what's needed to begin testing all-time highs and basically put us back into a bullish structure. So with that said, my name is Jared. This is Engineering the Market. Lot to digest from last week. Ultimately, didn't even get to everything that I wanted to cover. Just keep in mind this week as well is riddled with earnings. We're starting off with Netflix starting tomorrow, one of our bigger market cap names. But there is a calendar worth of names. And if you filter on something like S&P 100, you'll start to see some of those names propagate. The likes of J&J, BK, Procter & Gamble, Philip Morris, and Netflix occurring tomorrow. Most of them before market, Netflix after market. So stay tuned, trade safe, stay online for pre-market prep, and we'll talk more tomorrow.
Good morning, everyone. Welcome to the pre-market prep. I hope you're having an amazing morning. Hope you had an incredible weekend. Good morning, Peter. How are you doing today?
Good morning, Carlos. I am great. How are you, and how was your weekend?
Doing good. Weekend was good. Yeah, can't complain, man. Cannot complain. Very good there. So,
Excellent.
with that said, Norm is off, I believe today, and I think he's back tomorrow. He might be off tomorrow. I don't recall, but he's
Yeah,
taking some
I
time
think
off.
it's free tomorrow.
Yep. And we'll definitely give him that time for him to take care of some stuff there. Gappers list this morning, guys. Jared went through a lot of stuff this morning as well in regards to earnings, SPY, and overall market information there. Our gappers list this morning, not too bad. We got a bit on both sides of the field here. Today we'll definitely get into both of those sense. Couple of low flows, not bad. Only three I see total here, so okay there. Peter, as far as the market goes, any information for today, what's coming up? I believe this U.S. economy calendar you're seeing there is not up to date. Norm is the one that updates that, so I wouldn't go by that there.
Yeah, that is not up to date. Not much this morning. We do have a home builder index which comes out around 10 o'clock, and I think we have a couple other things this morning right at 9:15. Industrial production. But those don't tend to move the market. So we'll sort of see what the overall economic conditions bring. As Jared was pointing out, we really need to see if conditions are going to create chop or if we're going to get some directional moves. So I am going to just see what the stocks bring me. We do have some interesting stuff moving. So I think we'll focus there. And Carlos, we actually have quite a few to get through. So.
Yes, we sure do here. All right, guys, let's jump right into it. Let's starting with VALN. This morning, we are up 32% on this one, 234,000 shares. I'm not liking the price action right now. The day looks horrible, so I'm going to skip on this one, guys. Again, not much to see here at the moment. Heading on down to XH, 2 million shares flow at the moment. They're up 10%, 1.5 million shares traded. They've been on a decent run the last couple of days, weeks or so. You can see here hanging around $2, $1, 175 looks like around there, and then slowly climbing up here as high as 850 this morning. Now hanging around at 650. So definitely it's got some movement to it. Pre-market action doesn't look great. Let's take a look how it traded on Friday. Even Friday's action. Although, again, this looks like a very nice daily bar here. If you look at how that traded in the intraday, it wasn't pretty. So I'm concerned with that being any good today. I'm going to leave it off my list for now. We can always put it back. OYST today. They are up 10.5, 1.7. This is also low flow sitting at 10 million here. Pre-market action, again, we like these low flows to kind of, build up, and you see the nice ramp coming up here. ABCD patterns after ABCD patterns or breakouts. Here, you just got this one pump, and it's just been literally moving sideways. So pre-market, you haven't seen any gray action and slightly downwards here. You haven't seen any gray action in the pre-market. The numbers here look good, but overall not great. Daily looks horrible, which is okay for a low flow stock. You don't need to have a great daily, but you at least want to see a decent pre-market activity, which I'm not seeing on that one right now. Peter, as you know, if there's any news that we should be looking into, cut me off and let me know, but I don't see anything great on these right now. AC ACI also up 5%. Horrible pre-market action, guys. Very light volume. We'll skip on this one. CCJ, I believe this was on our list a couple of times here. Today they're up 4.6 at 338,000. I do like their daily here, guys. Getting back to this area of resistance we had in the past. Volume's not bad. It's not great for the day for the daily here, but it's not bad. It might be worth taking a look at this CCJ. We'll see what happens there. DVAX this morning. Again, this one, guys, DVAX, NVAX, they're just very difficult stocks to trade when they are in play. Right now, I'm looking at this one. Does not seem like it is in play. It is up 4.5, 150,000, but outside of that, nothing else looks good here. So we'll skip on that one. We'll look at Baidu, one of our favorites here. Well, not mine, but I know a lot of people like to trade this one. This one's up 4.2, 485. Nice pop out of the daily here this morning, getting above this area that has not been up here above this since August. right? So August, you see a little bit of action. Actually, July. August try to get above this, had major resistance in doing so. Back in September, we came up again, tested that one more time, was not able to do that. This month, we've been hovering around this 165, and today we're breaking above that. So definitely breaking the trend here, guys, on Baidu. Maybe a possible. I know this can trade very well. The pre-market action is not going to look good now. You have to wait for the market open to see what's happening there. So we'll see what's going on there. Oxy this morning.
I'll take the
yeah.
Sorry, I'll take the opportunity while you're mentioning Baidu. We are seeing some increased, I don't know what to say, activity, or at least some news coming out of the Chinese regulators. So I haven't seen it directly affect any specific stock, but they are talking about, for instance, the Chinese, I can't remember what it's called, the Ministry of the Internet Services. They're talking about requiring some of these large companies to share data to reduce barriers. So that should be, that could have an impact over the course of this week, as we see, companies like Baidu and Baba, who rely on this, proprietary database they've got to, if they are required to open it up and share their platforms, that could have some impact. So I'll be keeping an eye on them generally, but we'll see. And this Hamish and others are pointing out Tencent, WeChat. There's a bunch of these Chinese-based companies that could be impacted. Yeah,
definitely worth taking a look at for sure. BTU this morning. What is this? Bitcoin BTU? What is this? This is something else. This is Peabody Energy Corporation. Not seeing anything great. What was that?
Is that it's an energy company? Yes.
Yeah.
Like the BTU symbol.
Yeah. Not seeing anything great on this right now. I mean, it just looks very choppy, guys. I don't see anything going on there. Oxy is usually what we like to see for oil companies. This one's looking a little bit better, up 3.1, 285. Might be worth taking a look at here. So again, guys, we have a lot here, but not a lot that looks great. Some stuff there has barely any pre-market activity. The volume doesn't look good. Billy here, last one on our gap up list, up 2.4, 116. Their daily's interesting here as we continue to consolidate above this 71.70 there. Maybe we can get something going there. I'm going to add it to our list, but not a whole lot that looks good so far this morning. Let's see what's gapping down.
I think I like OYST a little better than you do. I don't know whether we're going to get some good moves out of it. I mean, at least they have strong news. So as a company, they just got FDA approval for their, I do find it amusing that they've got a nasal spray that's going to cure dry eye. It seems like a very indirect way of going about curing dry eye, but hey, but any time a company, especially of this size, because it is relatively small, gets FDA approval, it tends to tends to push the stock. We had a lot of action earlier. Right now, it's not moving a lot, but I think we should get some volume once the market's open. So I'll keep a side eye on it, probably.
You keep a side eye on it. Peter.
All right. Sorry about that.
That is Peter for you right there, my friend. All right. I like that. Yeah. You know what? If the FDA approvals are interesting, I agree. I'm going to add it as a possible. I wasn't aware of that when I first looked at it. But yeah, let's add it on there. I mean, the volume, guys, is there. What I don't like on these is if the pop and then the starts dropping here. But FDA approvals can be interesting. Gapping down this morning, RVNC today. They are down, 35%. 276,000, so very light on volume. We have seen this ticker in the past, guys. It's a horrible intraday trading ticker stock right now. I mean, it's a big drop here. Even then, you might not get anything great on this. Volume is extremely light. I mean, just look at the drop you had here. What's the flow, by the way? 68 million. Look at this drop here. This one's last week? Yeah, go ahead.
Yeah. So this is another FDA news. Obviously, it's on the other side. We got all the crazy pharmaceutical companies today. So this one, the FDA said they are not going to approve their innovative treatment for frown lines. So if you were looking forward to it to get rid of your frown lines, don't hold your breath. RVNC's treatment's not going to be available anytime soon. But, again, this is one where I think there'll be more people getting out of it once the market's open. As you said, volume's lower on this, but the float is not bad. So there could be more people looking to just get out. So we'll see.
Excellent. Yeah, interesting. I'm just laughing at the comment here. Been married 26 years, never have dry eyes. That's a good one.
Oh,
All right, guys. So here it is, down at 35%, looking good as far as that. But other than that, nothing else looks great on this one, guys. I'm gonna keep it off my list. OMER today, they're down 16.7. Pre-market action, just very choppy. Nothing good here, guys. The drop is nice, 16%. Maybe we can get something going. Float on this 59. Yeah, don't know. Yeah, don't know this about that one. We'll skip for now, unless you have any catalyst that makes sense. I was taking a second look at it,
no,
but yeah,
Omer
it's just
pops up every once in a while, and I don't think I've ever taken a trade on it. I've never found
yeah.
it to trade in a way that makes me eager to put my money in.
Mhm. Yeah, no way. AVDL this morning, they are down 15%. Horrible daily. We've seen this one, guys, in the past. It doesn't trade very well. It's gapped up in our list before. Today they're gapping down 15%. You do have shares for sure. Pre-market actions just really all over the place here. Yeah, I don't like this one at all. Even if it has a catalyst, this thing just looks horrible. Peter, thank you so much for the super chat, man. Appreciate you very much. Thank you for that and the constant support there for our charities of the month. So thank you so much for that. Appreciate you.
Yeah, I gotta say, Peter's every day he's throwing another super chat out there. So good.
Yeah,
Good.
yeah.
Thank you
Peter,
for that.
and we also have Harry. Peter and Harry are very consistent with their donations. I appreciate you guys very much for doing that. All right, let's head down here. We have TIGR. This morning, they're down 9%, 1.5 million. I mean, this thing has been just getting killed, TIGR. I know we had it last week, but continues to drop here. I mean, we're hanging around 30, 28, 25, as high as 38. $20 here was really where they spent the most time, looks like. And now we are dropping down below 7. Wow. So down 9%, guys. Definitely in play. Has some volume here. Here's Harry. Thank you so much for the donation, my friend, and the constant support. Can't be left behind. So I appreciate that,
All
Harry.
right.
So thank you so much for that, guys. Again, every single donation, guys, dollar for dollar, will be going to the charity of the month. This month is breast cancer awareness, so that is going to be matched by Andrew, dollar for dollar, as well. So thank you so much for those donations. Appreciate you guys very much. TIGR, guys, nothing good here. I am going to skip on that one, unless you have
TIGR
anything.
is exactly what I was mentioning earlier, but like they're in sort of the front line of these Chinese companies that are getting impacted by the new proposed regulations
Okay.
to change the privacy rules, right, and force them to sort of share data more actively. So we'll see. I mean, TIGR, like you said, it hasn't been pretty, and I think it's going to get worse.
Yeah, it definitely hasn't. You know, I'm gonna put it on here. I want to take a second look at this. I mean, this thing just keeps dropping. We do have shares for sure. Plenty of shares with interactive brokers. Let's see where this goes. But we'll put it on here. Again, I don't think it's really in play. Well, it is in play, guys. It is in play. It's down 1.5. It's down 9%. The question is here, is it going to trade clean, right? That's the thing. Heading down Z this morning, they are down 7.7, 882,000. Man, the daily on this is just a little bit brutal. Very light on volume, higher price stock. So usually when you see that, when you see a higher price stock, you know, trading 80, 90, $100, and the volume is usually 3.8 for the most part. 4 million shares looks like around there. You're gonna have a bad pre-market, not bad pre-market action. You're gonna have a bad intraday action as far as price action. The spread could be a little funky at times. I saw it a lot higher earlier, about 20, 30 cents. You got to be careful with that because 30, 20, 40 cents on an $80 stock is still pretty decently high. So you want to be careful, especially when you're not getting great volume and that price action starts jumping around. You know, that can be a little concerning as far as risk management. And you're seeing that this morning. I mean, look at the volume we're getting. We're going from almost 90 down to 87, right? So I know obviously pre-market actually you don't have as much volume, but I don't expect us to get a whole lot more based on the history that we've seen right now. JB, thank you so much for the $5 bomb, man. Appreciate you joining the party here this morning with Peter and Harry. So again, all donations will be matched dollar for dollar. Thank you so much for the support, man. Appreciate you very much. this morning. Heading down.
Sorry, just on
Yeah.
Zillow it's a very interesting business. If you don't know much about it, just to keep an eye on this. It's not a great intraday trader, but from an overall news, they sort of really hit highs as they were entering the market to be a competitive real estate resource, an online broker, and they started really just doing that, right? They facilitated the sale of houses using their model. But over the course of the pandemic in the last year, they migrated to a model where they made an offer that they would actually buy houses from individuals, and they have an inventory now of something like 3,800 homes that they themselves then flip and put back on the market. It's just they've now stopped buying because they said they've hit capacity. But there's also a huge risk, of course, that they were buying at the top of the market. As you know, in most areas of North America, that market peaked earlier this year as there was a frenzy of people getting into new and bigger houses, especially. So
Yes,
we'll see.
yes.
Like I think just as a business model, they're struggling, and you can certainly, like you pointed out, Carlos. I mean, just look at that daily chart. So I've been sort of keeping an eye on it just in case we ever see people decide to get out en masse. But when you look at the daily, the moves intraday have been pretty low. So I keep hoping there's that one day where we're gonna have fantastic trading on it, but I haven't found it yet.
Yeah, no, it's one of those funky ones, so you got to be very careful on that one. Guys, Futu today. Futu here, we are down 7.52 million shares traded. Another one that's been taking quite a bit of a hit, especially the last week. Last week dropping here, guys, $90. We're down at 58. I mean, this thing is just, I think the joke last week was it doesn't care about its buyers for sure, or investors. You can see here how the drops are happening this morning, continuing again down 7.7. So again, I think this one is in play, worth taking a look at if you're able to manage your risk accordingly. That's the problem with this one. It's the risk management. We do have shares for sure on it. It is on short selling restriction. Let's see how this thing is going to trade today. So I'm interested to see how the drop is going to be. This was Friday, guys. It's just waterfall. I mean, try to get going. This is definitely a fake out here, as you can see. Gets below the VWAP, and just look at the drops that you're getting on this thing here. So we'll keep an eye on it. Definitely getting very extended towards the downside is going to be interesting as well. DATS is a low flow stock. I don't like this one. Very light on volume right now. We're going to skip on to the next one. UPST. Again, we had this on our list before. Another one that the spread can be brutal, dollar plus at times. So just be mindful of that. I don't like the price action on this one. It has been on a tear, as you can see here, since August. It's hanging around at 160 now at 373. So great for maybe swing trading if you can get an opportunity. But as far as day trading, it can be brutal. X this morning, X looks interesting. 1.4, we're down 4% here. Yeah, this looks good. Daily's okay, not great, but the rest of the numbers look all right. Let's add X on to the list. What's Space doing? Space I know has been struggling, and with the news they got last week here, another down day this morning so far, down 4.21 million shares traded. And here's the issue with Space, right? You dropped on Friday, but it wasn't great. It wasn't great action at the open. So look at this here. You had the one pop, the drop, and it just goes sideways, right? And this moves, they're not big, right? They're 20, 30 cents at best. So again, it's very difficult to get a nice move on Space when it drops like this. So I'm not sure. Maybe a possible for now. I know it can get going. Definitely extended towards the downside as they continue to get just, bad news on their whole thing going on over there. All right, let's stop over here, guys. I think we got plenty so far that we can go through. Peter, anything you like on your end?
Well, I am going to keep an eye on X. You did mention that. Obviously, I'm going to continue to watch AMD. It has not had any specific news, but it's actually been moving great the last couple of weeks. So you just never know when it's going to provide an opportunity. Another one that's in that same camp is Apple, that I know a lot of us have been watching and trading because Apple keeps giving us good moves almost every single day. So that's probably the main one. The other one that's interesting, just because of the price level, is Tesla. I don't trade it as often just because it's higher priced. And as we all know, right, the spread on Tesla can be wide, but if you know how to manage it, like Tiffany in the room, it can provide good opportunities. I mean, we were watching it try to break 800 just a few days ago. Now it's solidly over that at $850, and it still looks like it has some strength. So we'll see what Tesla does.
Yeah, Tesla definitely in play. Had a big day on Friday. Looking to continue this morning. Okay, let's take it to the room here. See what you guys have on deck. Starting with Alfredo. Alfredo, you have Disney. Let's start there. Disney. Let's take a look here. Today, Disney, they're down 2.3. Any news on Disney? They normally don't move a whole lot, but they're somewhat dropping pretty nice here. This morning, down 2.3, 185,000. I like this one when they have news. When they don't have news, they're so. Let's see here. Is it earnings or anything going on? Disney, nope, no earnings.
No, not today.
Not today. That's November actually, so they're far off from that. All right, we'll put it as a paso for now. Pre-market looks good. It needs to get a little bit better, but if they have news, it could be good.
They did have a ratings cut. I see from Barclays here, reduced their price target on them, but that's it. That's all I've got.
Okay, yeah, that might not be all that good, right? As far as the catalyst, so we'll have to see. No. FCell here this morning up 5.5, 2.8 million shares traded. I don't know about this one. I mean, the daily looks very interesting, guys. I know it's been running up nicely, but if you come in here and you start looking at the intraday action, it is so choppy. So that's my concern here. So don't get fooled by the daily here. Look at the days here, which we have done in the last couple of weeks, and it just trades very poorly intraday. So I'm on the fence on it. I know it has amazing volume. I know the day looks good for a possible breakout, especially as we're nearing this great area of resistance right over here, guys. It's $8 actually, or $7.80 looks like. If we can break out of that, could be nice for a nice run there. So we'll take a second look at it. CCL this morning, the travel sector, what's happening there? I don't know. CCL, you know what? Their daily is so bad. So bad. This is when we have fun with CCL. Can you see the difference when we have fun and when we stop having fun? I stopped having fun with CCL somewhere around here. Even actually earlier, around here, we stopped really having fun. And you can see it. Look how choppy this ranges are. What was that?
The fun was over.
The fun was over. Yeah, you had this one range here, this one drop, and then we're again back around 24, just chopping around. So, man, we had such a great time here. Look at the moves you're getting there. Now you're still getting the same volume. Volume has not really changed, right? CCL puts in a very good intraday value, but it is just not going anywhere. So maybe I got spoiled with some of the moves we had, and maybe we are getting decent moves on this thing, but I'm going to keep it off my list, guys. Let's move down over to OCGN, Chris MC, OCGN. Let's take a look here. OCGN has a good pre-market action. Daily is funky, it's all over the place. This was great Friday. You saw the drop here. I thought this thing was going to continue there, but look at the pre-market action. It does look good. I cannot say it does not. I'll give you that. There again, not one of my favorite tickers, but this pre-market action does look great. OCGN 2.4 up 6%. Let's take a look at that one closely. Facebook made a lot of noise the last couple of weeks. I think they're just kind of chopping around right now. Yeah, I had a nice drop on Friday. I didn't see that. Yeah, I'm gonna keep it off my list for now though. I think I have way too many on here. Maybe a possible at best, but that's really about it. Facebook heading down. Apple we do have. Peter did mention that one. Ben, AMC. Let's take a look at AMC. This was good on Thursday. Was it or Friday? I think it was Thursday. We had a nice run on this. Yeah, Thursday. Thursday was real nice. I believe was it Brian that traded? I can't remember, but Thursday was a nice run here on our AMC. Daily looks okay. Possible continuation. I mean, we had a nice run the last couple of days. I don't know how much juice there's left right now. Volume is 446, which is not amazing for AMC, right? AMC can put in some serious volume. Yeah, I'm gonna keep this one off, guys. Call it off. We start to see some volume, some activity, or we could look at this one in our scanners. VALN. I think this was the first one that we looked at, and I didn't like what we saw. VALN. Yeah, you got this one pop up. We're gapping up 35% here. I don't like the daily. This daily here kind of scares me. It's just all over the place. Even if they had a better pre-market activity, I'll just be careful with this one. I mean, look at the action you're getting here. What's this, a SPAC? Is it a SPAC? Meaning, I don't even know. Just be careful with that, guys. It doesn't look good on there. Let me see here. Neo, Jack. Space we looked at already. Let's see here. Neo's got some movement to it, lighter volume than usual. I'm going to keep it off my list for now. We have Tesla, which looks a whole lot better this morning, so I'll keep an eye on Tesla instead. Okay, let's stop here, guys. Let's look at some over on YouTube. What do you guys have on your end? Fuel cell we looked at. I have it as believe as a possible, or we took it off. Yeah, I have it as a possible. Definitely in play. I might move this up. I mean, it's definitely in play. I'm not a fan of this one, but definitely in play. OCGN we do have, so that's good. Space we looked at. We have that as a possible. Very good. AQB, Jacob is giving us that one. We have not looked at AQB. Oh, no. Let's move on. Jacob, this is nothing happening on this one here. So unless you're missing a letter on this ticker, yeah, this is not good right now. At least for intraday trading, it's not good. Let's look at the other one you're giving us. MITC. What do we have here? Oh, Jacob. No. Okay. Jay, let's go down to GS. What do we have? Goldman Sachs this morning. Not much going on there. Very light volume, but that could change, right? We know this stock doesn't put a great pre-market action from trading it so much. Peter, you okay with it?
Yeah. No. You're incensed.
Oh man, very active on Friday, guys. Goldman Sachs. So this is actually amazing trading for Goldman Sachs, because again, these banking stocks don't trade very well. Bank of America was another one that was also active. How did it end up doing? Yeah, it ended up doing pretty well too. Look at that, continue here. So I remember seeing the open and it did continue. So Bank of America very similar as well. Goldman Sachs again, more of a possible with these banking stocks. So I'm not going to add it to my list, but yes, they can definitely get going here. What else we have? West Fargo, another banking stock. What do we have going on there? Yeah, Big Day Friday, as we saw. We'll have to see, guys. I think these are going to move together. I don't want to add too many of these. Maybe I'll add, maybe we'll add Goldman Sachs. We'll just put it on here. We'll fine tune this list. Don't worry. I know it looks very long right now. Mara, I saw that on both sides of the field. Mara this morning, Mara's active. Mara's very active, actually, down 1.7. I like this drop on Mara here. So yeah, we'll make space for this. This looks better than some of the stuff that I have on my list as far as main takers. So I'm going to add Mara here. Don't worry, it's a lot on here that looks great.
You're going to have a lot to review and little time to do it. So.
Yeah, you know what? There's a lot here that I'm just going to chop off pretty quickly. That just don't look good. We put it there just as a holder. Let's take a look at one more, guys, because we're running out of time. Here's Plug. Plug this morning. Daily looks interesting. If it can start losing this level, pre-market action, it's okay, not great. We've seen better from Plug. I'm going to keep it off my list, guys. I have way too many. I think we can have other stuff that looks a little bit better this morning. All right, guys, let's go over to community announcements. But before I give it over to you, Peter, our webinars are not up to date because this is something that Norm does. So we will update that for you guys tomorrow. So tomorrow we'll give you the success webinars. We'll show you what's going on there. We'll give you the psychology webinars. Everything that's happening there will be updated for tomorrow morning.
Oh, well then, I may need your help, Carlos, because if we don't have the updated information. But let's start with our overall schedule. Every week, for those of you that are in the room, know that we have a set of activities that we go through, and it's always busy. So starting today, Brian comes in the afternoons and gives us his review of the markets and talks about his overall swing trades. That's always good to get a feel for what he's thinking of and what he's liking to trade over the course of the week. At night, for anybody that's new to the room and is interested in understanding more about how Bear Bull Trader works and how you get the most out of a membership, join Carlos for his onboarding class, which is at 8 o'clock. Tuesdays, then, we always go into our strategy webinars, which happen at 8 o'clock at night. And I can't forget, in the middle of the day in the trade room, we also have sessions that happen during the trading day. So at noon, for example, on Tuesdays and Thursdays, Eamon does his trade reviews. On Thursdays in the room, we have mentoring sessions. And then Fridays, we do our crypto membership. All of that happens in the room. Wednesday evenings, we also have psychology webinars. So they happen usually every Wednesday, 8 o'clock, unless we have some special guests and we change the time, but they happen every single week. And then last but not least, I cannot forget Thursday evening when it's Thor's Day mentorship, and Thor will lead all of his friends. He always gets a ton of people that show up and they have good questions. They just generally discuss the markets, trades, and how to leverage volume as you improve your trading. So that's our overall schedule. Specifically, as Carlos mentioned, we will apologize that we do not have the information updated here, but
Yeah,
let's take a look at some.
I'll give you guys a heads up. Tomorrow we are making a change. It was going to be Eamon, but we're making a change. We're going to have Artie tomorrow. Artie's going to be doing some option courses. This is probably the first time Eamon is hearing about it because things happen real fast. Me and Andrew and Artie were working on this yesterday. So Eamon, if you're listening, this is your notice, but I'll send you an email as well. So that's going to be Artie tomorrow, guys, Tuesday night for our success webinars. And then we'll also update the psychology webinar. So we'll give you all that information later today.
Fantastic. All right. Well, moving ahead, as we're seeing, right, we get these super stickers and the super chats. We really appreciate it as we match those donations, and it all goes to a nominated charity every month. This month, it will be the National Breast Cancer Foundation. So thank you, everybody who's donating generously and helping us make a contribution to our communities and to that worthwhile cause. For those traders that are here and want to show us what you're doing, share your trades. We'd love to see your trade. Ideally, we want it to be a live trade, right? Not sim trades, but post your trade for all to see on Twitter. Use the tags and hashtags you see on the screen, and then Mike will pick the trade of the day from that. We talk about it in the room and post it back on Twitter to let everybody know that you were selected as the trade of the day. From those trades, we then vote over the weekend, and we present you with the trade of the week. That we'll be talking about in the room this afternoon. Mike will sort of tell us who the winner was, and then we'll post that again back on Twitter. So thank you to everybody who always posts their trades. We always get so many awesome trades. It's hard to pick from. Well, we like to see that. We like to see that our members are successful and that they're making some absolutely fantastic trades out there. And if you'd like to join us, there's always an opportunity to join us in the room all day. So the morning is really just the teaser, but hopefully we help you set up your day, right? So you can understand what's moving and what we're looking at. But then throughout the day, we trade live. We'll talk about your trades and our member trades. We get call outs and notices as to what's happening actively and real time in the markets. If you want to join and see if this is an environment that you can thrive in, then use the code PREMARKET24 to get a discounted rate off of our 1-week trial. We promise you, we will not market the heck out of you. Once it's done, it's done. It's your choice as to whether you would continue or not. It's worth that investment if you're just considering, joining any sort of community for trading. Hopefully, we'll see you and then say hi once you're there. And we love to talk to our new members. If that is a good experience and you want to join us full time, or whenever you can, then use the code FALL40 to get 40% off our annual elite membership. So hopefully we'll see you in the room, even if it's just for a trial. Say hi and join the community. All right, with that, as we mentioned, as was mentioned in the room, people are saying, aren't we having sort of our Monday psychology session? And the answer is yes, absolutely. And I'm so happy. Kreda, good morning. It's been a while.
Hi, Peter. How are you? It has. It was a nice surprise to see you on here when I jumped on. So hope you're keeping well.
I'm going to
jump right into it
today just so I could talk to you.
Nah, of course. Don't need an excuse, Peter.
Anyway, I honestly don't know what the topic is today. So why don't I just hand it over to you?
Perfect. We're sticking with the idea of pressure, which we've been talking about for the past couple of weeks, but we're taking a different angle on it. So the first week we spoke about what pressure does to your thinking, how it actually changes and impacts your thinking in a negative way usually. And then last week we spoke about using meditation to try and pull down that sense of pressure that you feel under. But today we want to talk about mental skills that you can use to actually help you withstand pressure. So it's not about taking the pressure away. It's actually just about being able to continue to perform at your peak while you're still experiencing pressure. So a really useful skill to have. And these are called mental skills. So they're techniques that come from sports psychology. I'm going to talk about two of them. So self-talk and mental imagery. But they're called mental skills because they're techniques that you actually become more proficient in with practice. So the more that you use them, the more that they'll work for you and the more that they'll help your performance. And I'm offering up two today because it depends on how people's brains are wired or how they like to think. So some people are more verbal and some people are more visual. And so hopefully you'll find one or other of these strategies more suited to you. And so I'm just going to talk through the two of them, but basically they both do the same thing. They just come at it from a different angle. So the purpose of self-talk and imagery in sports performance is to help people to build confidence, keep your motivation high, and specifically to learn skills. So to actually improve the learning and execution of skills. And so if we think about that in a trading context, it equally applies. So you can use these to build motivation, keep your confidence high, especially when under pressure, and really importantly, to keep you taking the right actions in your trading when you're experiencing pressure, so that you're actually executing your trading plan really well, on point, exactly as how you want it to, and not affected by pressure the way that we were talking about, how it kind of unravels your thinking. So the first of these is, well, it comes from self-talk, but I'm going to turn it into affirmations. And for anyone who follows the webinars, you'll know that I'm a big fan of affirmations. So these are basically just positive statements that you say to yourself in the present tense, as if it's already true. And so when you use self-talk to enhance your performance, you're deciding on phrases and, in this case, affirmation statements that are really meaningful and specific to your performance. So if anyone's ever heard of this topic before, you might know that there's a lot of resources on the internet that will talk about even affirmations for trading. But to make this a really effective strategy for you, it's important that you actually personalize these statements and you make them very relevant to what you're trying to achieve in your trading. So quick example of this would be, let's say that you wanted to improve your patience waiting for setups in the market. You might say, write an affirmation script that says, I wait like a sniper for the right setup to appear. So that's a statement that's affirming that you're patient and that you're only taking quality setups. So that's an example of an affirmation. And obviously I could talk about this in a lot more depth, but just to give you a quick flavor of it, what you would then do is you'd come up with a list of these affirmations that reinforce the actions that you want to take in the market. So probably your trading rules and your trading plan. And then you would record them as a script with you actually saying the sentences. So it's hard for your mind or your subconscious to fight with it if it's your own voice saying it. And then you listen to these every day. And then over time, like I said, it takes about 2 weeks to really start noticing a difference here. But if you keep listening to that script every day, you'll start to notice that actually you're taking the right actions even when you feel under pressure in the market. And so that's one way to withstand pressure and keep your performance really high. And then the other way that we're talking about is mental imagery. So some people might have heard of this in the context of visualization. And I'm calling it mental imagery just because you can actually engage more than just the visual sense with this. You can engage, hearing, you can have images of sounds, images of smells. You can build up a whole imagery script that engages all of your senses. And so what this is about is mentally rehearsing your perfect trading day. So right from when you get up in the morning, how you prepare, going through your pre-trading routine really effectively, really well, and then actually talking through, describing as if you're in the market and you're trading and exactly how you want to feel, the actions you want to be taking, the results you want to be seeing. And you can write that like a story in the present tense, so a bit different to the affirmations. And then you record this as an imagery script. And then you would practice this maybe 3 or 4 times a week where you actually, it might be 10 minutes long. You go off, quiet room, close your eyes, listen to the script, and then you imagine yourself actually taking these actions. So you really visualize what's happening. And they're just two, I've only completely gone through them in a very short amount of time there, but they're two really, really effective strategies. So there's tons of information on the internet about these two strategies. So really encourage you to look them up, give it a go. And try one or the other, or try both if you want. You can use both at the same time as well, or both as strategies for your trading. So just a way to keep your performance high and to keep you resilient in the face of pressure.
Kreda, I was just looking at my phone as you were talking, because almost a year ago, you helped me with my own affirmations, and I still use them every day. It's a recording on my phone. Like you said, it's your own voice. It's super awkward at first to listen to yourself, but now that I've been doing it for almost a year, it's funny because at the end, I can't help myself from saying, thank you, me, for for the positive words. But it does help, I find, level myself and make sure that I stay focused on the positive aspects, because it's very easy to go to negative self-talk. These affirmations help focus on what I'm trying to achieve, not the mistakes I make along the way. So,
that's awesome. I'm glad you're still using them. Great to hear.
Absolutely. Well, Kreda, thank you for that. And thank you for being here. We'll see you again, I guess, later this week, right?
Yeah. Talk to you Wednesday. See you, Peter. Bye.
All right. Take care.
Thank you so much, Creator. Let's give her a thumbs up over on YouTube. Appreciate her very much coming in here early in the week, getting us prepared mentally for the trading week. And we'll see her again on Wednesday morning as well. All right, guys, let's get to this list. We're going to chop this up pretty quickly. We're at 9:15 now. Plug, guys, I was looking at that one. That was starting to make a nice move here. I'm gonna add it here to the rest of our pile, but I like the way that's moving. Let's put that on there. All right, quickly, let's look at our main list. CCJ. Okay, for now, we'll leave it there. Oxy. So far, all right, not great. I'm gonna remove Oxy. It's not great at the moment. TIGR definitely got some good moves here. Great volume. We'll keep this one on there. Futu, guys, I know this is moving. I know this is in play, but I just don't know if I can manage the risk accordingly on this one. I'm gonna remove it, or at least bring it down to a possible, right? At least let's do that for Futu this morning. There we go. So remove it from our main list as of now. X 1.9 million. I like the volume. I like the drop down 4.8. That is good there. Apple also looking very nice. Look at Apple's pre-market activity, guys. Peter, you gave us this one earlier. Looking very, very good. Daily as well. Let's remove some levels here. We are looking nice on that one as well. So we clean that up. You can see the beautiful daily activity there also. Here's Tesla. That is good. OCGN, I'm going to move out of the way here. We'll delete this. That could be a good possible. I think we'll put this one down here. OCGN. There we go. Fuel cell. This is one I'm going to remove completely, even from the possibles list. I know they got 3.6. I know they're up 5%. For me personally, it is not a good trading stock. It's just difficult for me to trade. I like Mara this morning, moving very well at the moment. Had a nice run on the daily, and now we're getting a good pre-market action with 713,000 shares traded. That's quite the volume there for Mara, so I like that one. And then Plug, I just added now because it's dropping here pretty nice, looking to close this recent gap up that we had, right? So let's see if it does that. 1, 2, 3, 4, 5, 6, 7. One too many. Let's get rid of one more, and I think it might be CCJ, guys. I think it might be CCJ that buys the duds here. Let's see here. Yeah, CCJ. We will move you down, my friend. Let's bring it down over here, CCJ. Okay, possibles list. We're going to go through this very quickly. Goldman Sachs, we're going to remove right now. I know the day looks good, but we wait for that to hit the scanners. I know some people are going to be watching that one. Facebook, I don't think it's really in play right now. Let's get rid of it. AMD, you know what? AMD has a horrible pre-market action, Peter, and it can do very well. We've seen that many, many times. So I'm going to keep that on there as a possible. Space here looking very good, guys. I like Space this morning. Let's see if this thing can continue. Beautiful drop here on 8:30. Nice action there. Billy, we're going to remove as well. Not looking great at the moment. Baidu is very active. We'll keep that one. OYST is okay. Disney, we don't have much going on at the moment. Let's get rid of it. Futu, we'll keep Futu, OCJ, and CCJ. Okay, we have a more manageable list. I think we removed CCJ from here. Yes, we did. 1, 2, 3, 4, 5, 6. Perfect. Let's get to levels, guys. All right, started with Tiger this morning. Again, a great activity so far. Low of the pre-market, getting a little bit of a bounce of 688 right now. So that's your low of your pre-market. I am going to mark this level as well, though, because you can clearly see there is a lot of action happening at 718. You're seeing tons of support happening there, a little bit of resistance earlier on, and just some overall touches on the candles. So definitely at 718, you want to have that marked down on your list. Towards the top, guys, highs and lows from the last 2 trading days, doing an amazing job. The only thing I want to do here is I want to go to the back, right here to the left. If we go to the left, do we have anything below the 688? We have not been down here in quite some time. We're looking at December 2020. So right over here, we're looking at 641, another level, and then down here, guys, over at $6. So 2 levels towards the bottom there. If we are going to head back towards the lows here on TIGR. Here is X, 2 million shares traded. High of the pre-market this morning, 21.72. Low of the pre-market, 21 on the dot there. Looking to break lower, hopefully there. Towards the bottom here, 2044, good level. Price action right now trying to mess with this 21, but not 2092. We got a nice area of resistance right on there. We're going to head towards that right now. Let's see if we can hold there. Towards the top, highs and lows from the last 2 trading days. So you're pretty much covered there. But I am going to mark this area too. This is between your price action now and your pre-market high. This is going to be 21.42. You can see tons of touches around that area. 21.42, definitely a level you want to have. Even in the pre-market now, you're seeing some of the touches you're getting right around that area, right slightly above here, but pretty much close to that 21.42. Definitely want to keep an eye on what's happening there. So that is X. Apple, great volume, continues to trade very well in the pre-market here. The daily struggling to get above this previous day close. We came up here, we tested it, and now we're struggling to get above that. Levels 146.10 will slam a level there. Another level up here at 147.50, and then right up here, guys, 149.27. Towards the bottom, pretty much cover highs and lows from the last 2 trading days. Here is Tesla this morning, guys, breaking above this 800 in style last week, and look at the continuation you're getting. Definitely in play this morning, 584,000 so far. We are going to add a high of the pre-market at 853 on the dot there. Towards the bottom, you got the highs and lows from the last 2 trading days. We know our highs here are sitting all the way up in the 900s, right? So we're going to go ahead and come here to the left and do some levels above this. We do have 877, great area. And the all-time high, is it 899 or is it, did we hit 900 all-time highs?
$900.40.
$900.40. All right, so we must have hit it in the pre-market, right, or somewhere around here. So we'll mark 899.91. Sounds like I'm selling you something, but we'll mark that price there for now. I think that's a good level at the moment, looking very good for continuation. Here is Mara, guys, very active. Bitcoin dropping down 1.4 at the moment. As far as levels, we're going to put the low of the pre-market sitting at 47, and then towards the top, we're going to put 50.05. So I think those are 2 good levels there. Outside of that, I think you're pretty much set on Mara. Highs and lows from the last 2 trading days are doing an amazing job. Here is Plug, guys, continues to drop. You had a beautiful pop last week, an amazing run on the daily, and now we're just kind of having this engulfing change in direction and a continuation towards the downside. So let's see where this goes. Towards the top, highs and lows from the last 2 trading days. I'm going to mark down the high of the pre-market at 31.70. Low of the pre-market right now, 30.35. We'll leave that there. And then towards the bottom, we got a couple of areas here on the daily, 28.82 and obviously 29.96. So pretty good there. Again, Plug very active the last couple of weeks, guys. Look at this daily. Let's see if we can get a nice continuation towards the bottom here. All right, so that is what we have. Quickly, I'm going to tell you guys what our moderators are watching. I see Andrew is ready to go here. I have his list as well. Let's just bring this over. Moderators list. We'll take care of this over here. Just stop that there, guys. If you haven't done so already, hit that thumbs up over on YouTube. We appreciate it very, very much. It helps the channel out a whole lot. And do not forget, today at 9 p.m. 8 p.m. Eastern time, we have an onboarding class, so don't miss that out. If you haven't signed up yet, you can do so. Head over to our website. There's also a link right in chat, and get a free trial, $24 trial period to check out our members areas in our website, our chat room. All right, here we have Jared. He's looking at AMC, Tesla, Amazon, and space. John is looking at Microsoft, Tesla, and Baidu. Dima, Apple, CCJ, X, and Oxy. Tiffany likes Tesla, Apple, Baidu, and Oxy. No IPOs and no SPACs this morning. Thank you, Peter. Eamon is looking at AMD. Couple of long opportunities. DKNG, risky, and X are both risky.
Right.
Bless you there. And potential shorts: Apple, Bank of America, West Fargo, and CVX. CVX or CVS? Simon is looking at DKNG, SKLZ, NEO, and Bank of America. Got some key levels there for you. Jared has Plug, Futu, and UPST, both very volatile. Be very, very careful. Brian with his list: Baidu, Plug, DKNG, Mara, and C. Mike, NVIDIA, and AMD. Peter, you're looking at AMD, Apple, X, Goldman Sachs, Tesla, and Plug. And here's Andrew's list. Not a big fan of anything right now, but he likes Apple, AMD, Space, Tesla, and OYST for low flow this morning. So, guys, that is what we have. Thank you so much for joining the pre-market show over on YouTube. We appreciate you guys very, very much. Hit that thumbs up if you have not done so already. Consider subscribing. We are live again tomorrow with Engineering the Markets at 8 a.m. Eastern time. So take care, guys. Stay safe, and we will see you tonight for the onboarding class.